This conference will now be recorded.
Good morning, everybody. This is Greg Morton. It is Sunday, June 5th, 2022. This is the weekend video update for Canslim growth stock investors via the Greenville Eastside IBD meetup group, as well as the Stockyard meetup group. As always, educational purposes only. Y'all get it. You need your own rules. You need to follow your rules. You need to modify your rules. So all investing has substantial risk of big losses. So make sure we learn first and only then invest. So we'll look at the M factor like we do every weekend. We'll look at what we saw this week. Was it constructive action or destructive action? It's a disappointing week. We'll look at some charts and just a quick note on our upcoming educational monthly meeting. So the M factor, of course, this is the most important thing under O'Neill's system. And he emphasizes we always want to diagnose, we want to interpret, we don't want to predict. We look at three things: action of leading stocks, still very little life beyond oil and gas showing up right now as far as sectors. Actions of stocks owned. This week, I cut the percentage exposure some in the group teaching portfolio, kind of based on the market action and things just looking weak. We look at the market pulse, distribution day count, price and volume on the indexes, as well as the coloring book. So let's get out of here and take a look. Let's go to Market Smith, go to the indexes. So here's the NASDAQ on a daily chart. So where we are now, here's the most recent follow through day, which was the fifth follow through day in this bear market. And we had a subsequent follow through day the next week. And then things were just choppy this week. Had a high volume distribution day on Tuesday after the Monday holiday. And then, indexes are down. Then you have this nice up day on price, but you have no volume. And then you have a poor close on Friday. Markets kind of sold off all day. I guess it was constructive that the volume was down. We still are, here's the 25% offline. So we're sort of right there, have retaken the 10-day, trying to hold the 21-day, still got terribly declining 50-day and 200-day. So there's just a lot of work to get back in healthy market territory. If we do get back to the 50, it's going to be real important to see, is this one of those things where we come up close and go back down, or go above it and then come back down? Do we get that third leg down? See it a little better on a weekly chart. So here's really the first leg down, came up, made a lower high. Here's the second leg down, I think, in this bear market. And so we're watching to see if we get a typical third leg down, or if things go better. So go back to the daily. Here's the S&P 500, sort of the same, looks very similar, battling to hold that 21-day line. We have not had a follow-through day yet on any index except the NASDAQ. So here's the NYSE, sort of the strength's been here, again, holding the 21-day a little better than the other indexes this week. And here's the Dow, looks very similar, still got 50 down, 200-day down. Russell, same thing. You just see they're all battling there at the 21-day. So that's a key thing to keep an eye on, if they're going to break that, or if maybe we're going to get a tradable rally that continues a little bit. And if we look at the coloring book this week, so again, we had distribution days on Tuesday. As of Friday, I only have 7 buying days, 11 selling days. Oh, this one should have been red. It was a selling day. Here, let me fix that. Okay. So market school exposure went to 2, it's dropped back down to only 1. Power outage is still on the way I calculate it. Did have 2 breakouts Friday, again, oil and gas. So even continue to see breakouts there. Same thing back up here. These are oil and gas plays in some of these names. So, and then a couple that aren't oil and gas. So we can look at those and see how they're progressing. So new high, new low indicator, the NYSE has turned green the way Matt Caruso tracks it. The NASDAQ still sort of flipping back and forth on that. So just not a real constructive week, even though we have this green. And then if you count the 25-day window distribution day count, I have 6, 7, and 7. And then IBD has just in black the 1, 1, and 1 because they reset the count once they went into correction. And then coming up, so the Fed meeting results are going to be 1 week from this Wednesday coming up. The Fed meeting is Tuesday and Wednesday, the 14th and 15th. So we'll have that coming. And that week, I think will also be quadruple witching. So we'll just plow everything in front of us in that week. And if we go back over here and look at the group teaching portfolio, go back to the dashboard. So not a good week, down 3 of the days overall, still down 9.45% for the year, and only about 40% exposed. And the TQQ is really a shorter term trade anyway, so that's a sort of temporary exposure. So, that's where it is, and it's just still a cautionary market environment this week. So if we go back to the slideshow, we looked at that. Some key observations. So the window of opportunity is still open. That's positive. IBD's a confirmed uptrend. NASDAQ had a follow-through day and a subsequent follow-through day, but the other indexes have not had follow-through days. And then this last week, just kind of poor action overall. And we had that distribution day on Tuesday, which was 2 days after the follow-through day last Thursday. MMTS are green. Distribution days heavy, 6, 7, and 7. IBD has it 1, 1, and 1, as I mentioned. Market school exposure dropped down. We don't have a follow-through day on the S&P 500 or Dow yet. It's not required under O'Neill's system, but it's nice to see that additional confirmation. Still sort of a distribution dominant tape. New high-low indicators improving a little bit. We're in the confirmed uptrend, but power outage still. Chart still getting whacked on EPS or news, Tesla this week, that sort of thing. Growth was in a bear market. Seeing some setups, maybe some of those breakouts will work. We just have to watch them. And the moving average lines on the indexes just show a lot of serious work ahead, the way I see it. So it's still slow speed ahead, not full speed, not plunging. If you get a laser focused trade and it works, you can find another one, then can increase exposure. Got to be prepared for the follow through day to fail, but don't predict, interpret. Primary goal on every buy, just get me to the 20% profit goal, or maybe the 15% profit zone. Some people will adjust their rules when we're still in an overall bear market. We just may have a tradable rally within a bear market. So we'll see. So I left the same slide from last weekend, the green light zone, but there's a lot of yellow flags, things to pay attention to. Still a lot of market weights. This is a big one. The Fed is very hawkish in its talk right now on interest rates, talking about half point, not pausing in September like they were talking about. And then quantitative tightening has just started this month, and that's $47.5 billion per month for 3 months each month. And then they're going to double that number to $95 billion per month starting in September. So I have no idea how the market's going to react to this. You can read about historical tightening cycles, but here we have massive interest rate increases going on. At the same time, we have quantitative tightening. So I do not know how the market's going to handle this, and the Fed has said they do not care. All they care about is controlling inflation, and that's what the very hawkish comments that we're hearing. We have a Fed meeting that starts in 7 trading days from now. Or starts on the 7th trading day from now. Still have inflation issues, which we're all seeing. We have one quarter already negative GDP, so if we get another one, we'll officially be in a recession per the definition. Supply chain issues, baby formula, chips, car manufacturers cutting back that you're seeing. We had an ugly EPS season, and we're only about 4 weeks away. It'll start, the first week in July, or by July 10th, we'll ramp up for Q2. Well, really it's Q1. Sorry, I have that wrong. It's first quarter. So it's the second earnings season of this year. So war situation, today's day 102. Have Russia exposure issues coming up in conference calls. So things to keep an eye on. Are we going to get a third leg down in the bear market or more? Are we going to see capitulation? We haven't seen real fear yet, haven't seen real capitulation, haven't seen the put call ratio spike. Are we going to see climax runs? That's obviously the last sector tree in the sector forest right now. Prior leaders are pretty much all hit, Apple, Tesla. So they've gotten those. So it's a good time to be looking for new leadership. Average bear market is 9 months. We're 6.5 months in now. August 22nd is the 9-month mark, right before the Fed doubles down on the quantitative tightening. And then we're also entering the dog days of summer. So this is just something to be aware of. Summers normally bring lower volume, because if you think about it, we have about 10 weeks in the summer. Assuming all the big buyers are going to take a summer, then you spread 10% of them are gone each week. So that's just 10% less volume if they're not in there trading. So, lower volume normally brings higher volatility. So that's just something to be aware of. If we want to look at a few charts in Market Smith, I didn't have much to put in here this weekend. Not good. I put in Merck just because, so here's a stock that broke out, went up about 6% and has pulled all the way back to the pivot. So that's not a failed breakout yet, but 40 to 50% of Canslim breakouts do go up just a little bit, 5-6% range, 4%, and pull back. Now, if they go up double digits, like 10%, and come all the way back down, that's a big warning sign, and many people will be out on that. But Merck didn't go up that high. And then SQM, so this got slammed on Tuesday. All the lithium plays got slammed because Goldman Sachs came out with a report over last weekend that said in 2023, lithium prices were going to go down 73%, which that's just, to me, rather incredible given all the articles about the car makers seeing a shortage of lithium coming. So if we're having a shortage, it's unusual to see prices plunge 73%, but that's what they said. So it hit all these stocks. This is the leader in the lithium plays, in my opinion, and this one got hit less than the other ones if you go look at those on those various days. So Albemarle, that's another one. So it got hit. And then another lithium play is Livent. So it also got hit. That all happened starting on Tuesday and continued, although volume sort of tapered off. And here's one sort of in the chemical space. Got a flat base, kind of had a cup with handle. Now you got a base on base, 9% deep flat base. So could draw a trend line in there, but it's back under the 10 and 21 day, would be back above those if it were to break out. Wire, sort of another one, maybe to watch, actually did break above this trend line with some volume on Friday, which that was a low volume day in the market. So that was constructive action. And we do have just like a third position in that one in the group teaching portfolio. So not a whole lot of constructive charts to look at. Go back over here. So our monthly online meeting, last one was May 17th. Spent a lot of time talking about how to handle EPS season in your weekend routine. So it's a good time to be doing that before we really ramp up in July and that is the second quarter earnings season. Sorry, I said that wrong earlier. I had it correct. When we looked at cousin stocks in the EV space, So our next meeting will be June 14th on Tuesday at the Stockyard. So we'll look at the M factor, look at IBD live tidbits, Market Smith tricks or tools like we normally do. Probably look at this financial crisis bear in a little more detail than we've done. We'll look at the electrical vehicle space and the cousin stocks like lithium, like we've been doing each month as we go through this year. Look at the group teaching portfolio trades and post analysis. And then if there's anything to talk about in the IPO market, we'll take a look at those. So I have a list of prior meetings. You can order these are available. So if you don't have a set of written sell rules, we spent 3 months covering that. These are the recordings and the slide decks are available. Those are $15 per meeting. Also, if you don't have a good weekend routine, I spent 2 months covering that in the fall of 2021. So those are, I can send you a list of those if you're interested in ordering those because you don't have them. This is a great time to study in a difficult market. So you can email me and I'll send you the list and ordering information. Also, let's see, 2 websites. You can join the Stockyard Meetup site, which looks like that. That's where you sign up for meetings. And you can join the one I officially run with IBD. There's a lot of resources. If you go to the More tab, message boards, I don't know why they make this so hard. These top pinned posts are from me. So you can go in there. There's a lot of links. The top one has links to the group teaching portfolio and the coloring book and Steve Sweat's window of opportunity spreadsheet. And then the other ones just have a ton of Canslim resources I assembled over the years. If you're new to Canslim, here's some great introductory videos to Canslim. So take advantage of those. Again, great time to be studying. So, and then there's stuff on my YouTube page too, like a teaching on the 8-week hold presentation, as well as these weekly updates. So you're obviously there if you're watching this. So just like and subscribe to the YouTube page also. So that's it. We'll see what this week brings. If we still get sort of choppy week action or either make progress up or go down further. So we'll just have to wait and see. That's it. I'm out of here. Y'all have a good weekend routine.